Welcome back to Satoshi's Daily Podcast for another deep dive. Today is October 22nd, 2024, and we're tackling 3 fresh articles from Cointelegraph.
All right. Sounds good.
We're going to be looking at retail Bitcoin activity, some interesting ETF inflows, and a certain Fed president's take on crypto that has sparked, well, let's just say some debate.
Sounds like a full plate.
Definitely. So first up, retail Bitcoin transactions, specifically those under $1,000, saw a pretty significant jump, like a full 13% increase according to this article. What jumps out to you about that?
Well, the fact that it's smaller transactions is really interesting.
Right.
We're not just talking about Bitcoin whales making moves here. It suggests that everyday investors are feeling more confident, maybe even a bit less risk-averse with Bitcoin's recent price surges.
Yeah, it kind of feels like we saw something similar, I think, back in March before Bitcoin hit that last peak.
Right, exactly. Makes you wonder if history might be repeating itself.
Now, for something that seems a bit counterintuitive, BlackRock's Bitcoin ETF, IBIT, it just pulled in a massive $329 million in inflows. But here's the thing. This happened while Bitcoin dipped 3%. How do we make sense of that?
That's the really intriguing part. It's like institutional investors, the ones we often think of as being more strategic, are seeing these dips as buying opportunities. They're doubling down even when the market gets a little shaky.
So they see this as a blip then, not a sign of things to come.
Seems like it. It points to a strong belief in Bitcoin's long-term potential. Like they're not fazed by short-term volatility.
All right, now we got to address the elephant in the room, or rather the Fed president making waves with his comments. Yuko Shkari, he's claiming crypto is basically useless for anything other than buying drugs or illegal activities. I got to ask, how much truth is there to that?
Well, to be blunt, that statement is just flat out inaccurate. Blockchain data consistently shows that illicit crypto transactions make up a tiny, and I mean tiny, fraction of overall activity.
So this whole narrative about crypto being primarily for criminals, that's just a misconception then.
It's a misconception, and frankly, a harmful generalization. It ignores the growing number of legitimate uses for cryptocurrency and the whole potential of blockchain technology that underpins it.
Sounds like there's still some pretty big knowledge gaps.
Yeah.
Even among people in positions of power.
And that's exactly why it's so important to approach any statement like that with a critical eye, especially in the crypto space.
Do your own research. Don't just take someone's word for it, no matter how influential they might seem.
Absolutely.
Now, speaking of doing your own research, one thing that caught my eye in that article about BlackRock's ETF was a mention of the upcoming U.S. election and its potential impact on Bitcoin's price.
Yes. That's definitely interesting.
Have you noticed any patterns in the past, like around Brexit or other major political events? Does Bitcoin and the whole crypto market tend to react in predictable ways?
Oh, they definitely react. Remember what happened around Brexit? Or even previous U.S. elections? It's a good reminder that Bitcoin doesn't exist in its own little bubble. It's connected to global events, just like traditional markets.
So, while we can't predict the future,
Of course not.
it's probably safe to say this upcoming election could shake things up in the crypto world.
It's definitely something to keep an eye on, for sure.
Speaking of keeping an eye on things, it's fascinating to see how differently retail and institutional investors are approaching the market right now. Almost like you're looking at 2 completely different things.
It really is. It's like you've got retail investors, maybe driven a bit more by emotion, seeing Bitcoin dip and some panic selling.
Selling low, the classic mistake.
Exactly. And then you have these institutions like BlackRock with their long-term strategies and deeper pockets seeing the same dip as a buying opportunity.
It's like 2 completely different playbooks.
Their perspectives are shaped by different goals, different levels of risk they're comfortable with, even just the information they have access to. It makes a huge difference.
So for our listeners who are newer to Bitcoin, what's the key takeaway here? What can they learn from this?
I think the biggest thing is to know yourself, know your investment goals, your risk tolerance. Don't let your emotions drive your decisions. Do your research, think long-term, and remember, every dip, every market downturn, it's also an opportunity.
Words to live by, especially in the crypto world. Speaking of opportunities, let's talk a bit more about something we touched on earlier. The importance of accurate information, which feels more crucial than ever in the crypto space.
Especially with so much misinformation swirling around out there.
Exactly. So how can our listeners cut through the noise? How can they make sure they're making informed decisions?
Well, that's the million-dollar question, isn't it?
It really is. So what are your thoughts? How do we sift through it all?
Being critical of your sources is paramount. Don't just blindly trust everything you read online, even if it seems like it's from a reputable source. Remember what we were just discussing about that statement on Bitcoin being used for illegal activities? Even people in positions of authority can get it wrong.
And that one definitely turned out to be a misconception.
Exactly. Look for sources that cite their data, that offer a variety of perspectives. Don't be afraid to dig deeper, cross-reference things. Even consult with a financial advisor if you need to.
And never stop asking questions.
Absolutely. That's what critical thinking is all about.
Well said. Now, let's zoom out for a second. Look at the bigger picture. We've talked about price swings, institutional moves, even the upcoming election. But what about the tech behind it all? Where does blockchain fit into all of this?
Well, that's the thing, isn't it? It's easy to get caught up in the day-to-day, the price ticking up and down, but blockchain, that's the real revolution here.
It's the foundation, really.
Exactly. And it's about so much more than just Bitcoin or even just cryptocurrency. We're talking about a fundamental shift in how we think about trust, about transactions, about data. Imagine a world with more transparent supply chains, secure voting systems, new forms of digital identity, all built on blockchain technology.
It's mind-blowing when you really start to think about the possibilities.
It really is. And while it might seem a bit disconnected from, say, the price of Bitcoin on any given day, understanding blockchain is crucial for understanding why Bitcoin has value in the first place.
So even though the price might fluctuate, the tech itself, that's what's got the staying power.
Exactly. That's what's drawing in those long-term investors, the institutions, the individuals who see Bitcoin as a hedge against inflation, a store of value. They're betting on the underlying technology just as much as they are on the asset itself.
It sounds like blockchain is something every investor should at least be familiar with, regardless of their risk tolerance or how much experience they have.
Absolutely. This isn't some fringe tech anymore. It's rapidly becoming mainstream, and its impact is only going to grow in the coming years.
So as we're trying to make sense of Bitcoin's price movements, those big ETF investments, even those, well, interesting comments from the Fed, it's important to keep that bigger picture in mind.
Absolutely. Don't get too caught up in the short-term noise. Zoom out. Focus on the fundamentals. Why are people so excited about Bitcoin and blockchain in the first place? That's what matters.
That's a great point. And speaking of fundamentals, before we move on, I wanted to circle back to something you mentioned earlier about doing your own research, maybe even consulting with a financial advisor, especially when it comes to something as complex as cryptocurrency.
It's crucial. There's so much information out there, and frankly, not all of it is good information. You can't just rely on headlines or what someone on social media is saying.
So where should our listeners even start? Where do they find good, reliable information?
Well, there are some great resources out there. Websites, podcasts, even books that are known for accuracy and in-depth analysis. Look for sources that cite their data, that offer diverse perspectives. And don't be afraid to dig into the nitty-gritty, the white papers, the technology itself.
What about financial advisors? Is that something you recommend?
Absolutely, especially if you're thinking about investing serious money. A good financial advisor can help you figure out your risk tolerance, how crypto fits into your overall investment strategy, that kind of thing.
So doing your homework, maybe getting some expert advice, it all helps mitigate some of the risk that comes with investing in something as volatile as cryptocurrency.
Precisely. Knowledge is power, especially when it comes to your money.
That's great advice. Now, before we get to our final thoughts, I wanted to touch on something that often comes up in discussions about Bitcoin, its environmental impact. Specifically, the energy consumption of Bitcoin mining. What are your thoughts on that?
Yeah, that's the other side of the coin, right? You can't talk about Bitcoin without acknowledging the energy consumption that goes into mining. It's a significant concern, especially as the network keeps growing.
So how should investors be thinking about this? Is it a deal breaker?
Well, it's definitely something to be aware of, but it's not a simple issue. There are a lot of factors to consider.
Like what?
Well, for example, you'll often see these comparisons between Bitcoin's energy usage and that of entire countries. And while that might sound alarming, it's not always the most helpful comparison.
Right, because it's not like Bitcoin is powering an entire country's infrastructure.
Exactly. It makes more sense to compare it to other financial systems, taking into account things like transaction volume and security. And even then, the narrative is changing.
How so?
While the Bitcoin mining industry itself is becoming more aware of its environmental impact, there's a big push towards renewable energy sources, more efficient mining hardware, and algorithms.
So it's not a static problem. There are people actively working on solutions.
Absolutely. And that's something investors should be paying attention to as well. Look at the mining companies. Are they using renewable energy? Are they transparent about their energy consumption?
It's about looking beyond just the price of Bitcoin and considering the whole ecosystem.
Exactly. Sustainability is becoming a bigger and bigger factor in all kinds of industries, and crypto is no exception.
It sounds like the conversation around Bitcoin and its environmental impact is becoming more nuanced, more focused on finding solutions.
It is, and that's a good thing. It's important to acknowledge the challenges, but also to recognize the progress being made.
For sure. Well, I think that's a great note to wrap things up on. We've covered a lot of ground today, from those smaller retail Bitcoin transactions to BlackRock's big ETF moves. We talked about the importance of accurate information, doing your own research, and even touched on the potential impact of the upcoming U.S. election.
It's been a whirlwind, and we only scratched the surface, really.
Exactly. The crypto world is constantly changing. There's always something new to learn, something new to explore.
That's what makes it so exciting.
It really is. So for our listeners, whether you're a seasoned Bitcoiner or just starting your journey, remember, stay informed, stay curious, and as always, happy investing. That's a wrap on this deep dive for today here on Satoshi's Daily Podcast. We'll catch you next time.